RTY. Oh, good night, dude. There we go. RTY, the trend is still bullish, yet there could be some profit taking in 2020, so we might see some big outsized moves down. We've seen some significant volatility increase due to news and a few outsized moves early in the month, I think because of that. The structure, we're in a 7-day structure with a high and a low of 81 and 47 respectively. I think the volatility would tighten up a bit before we get more regular cadence of higher volatility. The ADR is increasing, but the daily range isn't beating it in a heavy way. So just a few weeks ago, we dropped to 10 points, and now we're at 16. The structural point of control shifted 3 times during Friday's session, 61, then 67, then back to 61, and now 59.8, moving it down lower. This is key as a failed snapback to 67 should mean a test lower of the the lower area of the structure. And no test down should mean a snapback. So what that means is that we are looking for a strong opening, testing up, snap back to 67, because this point of control has moved around so many times. Now that we've shifted under it, a strong move should snap us back here. If that doesn't happen, then we're looking to test down into this area here. The overnight profile is an inside period. Nothing significant about the point of control, I suppose. Weekly, I believe 66 is an important number given the block nature of the volume profile that we're in. This particular price has been rejected both sides a total of 6 times. I believe it may be the developing VPOC of the area. It is not the VPOC of the area. I'm just looking at something where price is rejected a few times. The vola from current price is 79 and 47. We're currently in range above yesterday's point of control and above the micro composite point of control. The overnight has left that area. So in an open auction reversal day long situation where we test down, my guess is that we have a little bit of an open auction. We impulse down to the point of control. We impulse back through the open, test 66. This is not the snapback thing. In fact, the testing down, this would be more of a technical move down. So this would be testing down and then reversing the open with 2 impulses to get up to 66 and then 71. Normal day long would be that we're already opening above both points of control, so we're just looking to see that the developing point of control stays below us, and then we're trying to, this is the snapback scenario. In an OA RDS, we're expecting wide rotations with no impulses, fail to get above the developing point of control, impulse to 60, short, slice through it, push down to 56. Now we could bounce off of 60, I could totally see that. Find buyers and rotate back, and that's where we become a balanced day. Mostly short, but that would be that case. Normal day short was we slice the point of control lower, test into 56 or 52 before we impulse back, and in this scenario we want to keep pressing the shorts. That is the ideas for today.